Are you wondering what the heck is going to happen with the interest rates and the real estate market coming next year?
Hi, I'm Kelley Norton, your AZ Realty lady at EXP Realty. Count on me for all things Arizona real estate.
Well, I have a pro here. I will let him introduce himself.
I'm Ricky Camus, National Business Development Manager with AmeriFirst Financial. Been in the lending business for 22 years, and knowing the market is really critical as a lender. And I think that's why we're here today, right?
Absolutely. I've been getting a lot of questions from people, and they're asking me, what's going to happen next year? What changes are going to happen? What are the interest rates going to do? So why don't we start with just talking about maybe projections? I know that you just immerse yourself with information. Yeah. So if you can share some of the information that you've been learning and been getting about interest rates, that would be great.
Sure. So, nobody has a crystal ball, obviously.
Exactly.
And that's the go-to answer. However, we can predict, right? And I know if I were entering the market as either a first-time home buyer or going to buy a second home or move up or something like that, I would probably do it sooner than later, and I actually am right now because of what's going on globally. Okay, right. There's a lot of things that go into the pot that make interest rates and what move the market. Number one, interest rates are tied to mortgage-backed securities. Mortgage-backed securities are what we all invest in our 401ks, our IRAs. We are the end investors on our rates, okay? So the economy moves rates. And as we know, the economy is in some trouble right now, right? You see gas prices going up double. You see, there's just a lot of things going on.
Yeah.
The number one thing that's going to drive interest rates up, though, is what's called the quantitative easing. And the government, the Fed specifically, they're going to start tapering on their mortgage-backed security buying. When that happens, rates are going to shoot up a half a point overnight. And that's what we need to be prepared for. So in the last meeting, they actually added some language that they were saying that they're going to move up the date on when they're going to start easing. That already shot rates up 3/8 in like a week.
Yeah. Hey, it's Kelley Norton, your AZ Realty lady. If you like the information I'm providing, then please subscribe to my channel, click the bell, and we'll keep dropping amazing videos for you. Thank you so much.
So the other thing that we have to be conscious of, though, is that compared to paying rent or not owning an investment property,
yes,
really rates could shoot up to 9%, and it would still make sense to do that over rent. Because if you look at rent, when you pay a $2,000 rent payment, it all goes to the investor. Right?
Yeah.
When you pay your own $2,000 rent payment, 30–40% of that goes into a savings account that someday when you sell that home, you tap back into.
Right. And what I think a lot of people don't understand too is when it comes to purchasing a home and selling a home, you only lose if you sell when it's a bad market.
Right.
So real estate investments are typically not meant for these quick turnarounds. I mean, people have gotten lucky where they've bought and then in 2 years they made a bunch of money and they could sell. But real estate is meant for you to hold. And so over time, that is typically a very good investment.
Well, yeah, it's the old tortoise and a hare, story. Like legitimately, if you want to create long-term wealth, you need to be the turtle. The hare usually fizzles out, and you start all back over. Yeah, great, you made $500,000 in a couple-year period. But if you have nothing to show for it and you have to start all back over again, you're not wealthy. You have the ability to make money, but it's more important on what you keep, and then more importantly on what you keep earns more.
Yes.
That's what real estate and why real estate makes more millionaires than any other investment, because of the long-term gain. So you're using somebody else's $500,000 to grow over a 30-year stretch.
Yep.
It's just, you can't lose. I think rates are going to end up by the end of 2022. We'll probably be locking in the fours. Right now we're locking in the fours on certain types of loans with certain types of credit profiles. But I locked one yesterday at 2.875. or on last week at
Yeah.
2.875. So it's still there. It just depends on the type of loan.
Right.
Right? Like you could go on the internet right now and find a 1.8 rate. What's that going to cost to get it? And how long do you have to hold that money to actually return? So you just have to be really careful when you're looking at things like that, and don't set your mindset on I'm a 1% rate, because you're never going to achieve that.
Right. So. Exactly. Yeah. And then I've also heard that there's going to be some changes. The feds are going to make changes for FHA. So what information can you share with that?
You know, so FHA loans are, they've been around for 3-4 decades, right? And you know, you have to look at an FHA loan as a way to enter the market.
Right.
You know, if you've had some issues, regardless if you're a first-time home buyer or not, if you've had issues, FHA overlooks a lot of that stuff, and you can still get in the market. Yeah. The reason why people, you know, look at FHA loans as, you know, I don't want to say subprime, it's not subprime, but they look at it like that is because of the mortgage insurance and the fact that the mortgage insurance doesn't go away. But if you look at the rate on an FHA loan is usually about a half lower than a conventional loan. And on a conventional loan, if your credit rating is below a 700, you're taking big hits in the mortgage insurance alone. Right. So sometimes it's better. The problem is that the mortgage insurance on an FHA loan never goes away. On a conventional loan, someday it goes away. Right. But if you look at that time and the history and the statistics of how long a person keeps a mortgage, it's probably better to go with an FHA loan. Right. Right? Because you're going to end up doing something with it. Whether you sell it, you refinance it, something will happen within that stretch that it just makes more sense.
And it's giving you an opportunity, like Ricky said, to enter the market where otherwise you wouldn't have that ability to do so, and better than renting.
One of my employees, young kid, was working with me for a couple years. We got him into a down payment assistance loan. Yep. Okay, so he came out of pocket no money. All right, and this was about 4 years ago. So what happened to the market in that 4 years? Right. Okay, so down payment assistance.
Made some money.
He did zero down.
Yeah.
He sold the house and pocketed 80 grand.
Yeah.
$80,000.
That's
young
incredible.
Kid.
Yeah.
He was able to buy his next house, had great credit profile after that. His next house was a conventional 20% down.
Yeah, I mean, it's incredible because I have similar stories with my clients. You know, I had a gal and she was buying a home for her and her daughter and was so scared to just make that push towards buying. And there was a home that was available. It was about $10,000 higher than what she wanted to pay, but $10,000 is just a tad bit in your payment. It's really not much. Right. But I can understand, you know, fixed income, and it was concerning for her. But just like the guy that works for you, I mean, she's been in the home 2 years and it's gone up $70,000. Now
I would trade 10 for 70 as
any
many times
day.
as I could.
Right, exactly.
Yeah.
Yeah, so you have to just make that move sometimes towards the uncomfortable, because that's change, but change is often good, and you're building in your future and your investment. And it helps you be able to have that move up purchase to eventually get your dream home. I have first time home buyers a lot of times say, well, it's not my dream home. Well, this is your first home and it's a stepping stone.
That's right.
I didn't buy my first home as a dream home. I bought it to get into the market, and then I leveraged the equity in that to then get into a nicer home and moving up into something else.
And then you do it again, and you do it again. And we're in that same position. And you know, for us, we've bought and sold, you know, dozens of rental properties and commercial properties and stuff. So having somebody that's been there and done that is really critical to your success today, right? Because prices are moving up. Right. And it's scaring people to get in the market, and they think it's going to crash because their parents went through the 2009 financial crisis. It's not the same thing.
It's not the same.
Back then, we were giving everyone loans.
Yeah, we were both in the business back when this happened. I've been in the business for 20 years, and you've been in for a long time as well. So we both were in this business. We both had properties during this time. So it very, very different market that caused the incline. So, and then the market that caused the decline. There was a lot of garbage that was happening.
That's
that
right.
really is not existing in today's market. And most of the loans, you know, there's some that are zero down and some that are assisted loans, but there's so much more cash in the market with down payments to have more of that stability as well.
We have right now the hottest loan we do, because the biggest buying demographic is millennials, right? 35 to about 28. And there's a huge group. And their parents have so much equity. Most of them are taking out equity lines, right? Which cost $200 or $300 a month to the parents. The children are using that for their down payments on their property they're buying now. So they're getting in with zero money out of pocket. And the parents aren't worried about it because it's an equity line. They're not planning on moving anytime soon. Even if they do, they pay it off. And it's just an easy way to get in.
And these are the creative ways that it's really important to have an experienced team on your side, because we can help you with a quick conversation. We can find out little ways that we can help leverage whatever situation you have and find that creative win for you to help you get into that home.
That's right.
So
you don't need 20%. Right. I've talked to 3 people last week. I still can't believe I hear this, but they thought you needed 20%. And that's why they haven't bought. And they're like, well, I've got 5 or 10%. Perfect.
Yes.
You can buy.
Exactly.
You don't need 20%. Now, if you or your parents feel like you need that, you need to talk to us so you can understand why that's not necessary. I've talked more people out of putting 20% down because it completely wipes them out than I have people who've put 20% down. Because you need some nest egg too.
Exactly.
So
plan for that rainy day.
That's
Still get in the house, but definitely give us a call, because this is really going to be a great conversation. If you want to just go ahead and click here, my information is provided for you. My phone number, Ricky's information will be on here as well, and would love to have a conversation with you so that we can figure out the creative way to help you get into your first home. And really quickly, I just want to talk to those who might be watching that are having a home to sell and then a home to purchase. We have very creative ways to help you where you can move into that next home, not have to vacate your home, still have leverage of purchasing the other home, and be very competitive. Even if there's 10 offers out there, we can help you be in the top 2. And we have creative ways to help you do that. So please give me a call. Happy to help. My number again is on the screen. Thank you so much for watching. Take care.
Hi, I'm Kelley Norton, your AZ Realty lady at EXP Realty. Count on me for all things Arizona real estate.